All right, man. I know that I'm putting a lot of DRS content out there, but hey, I'm doing this for a good purpose because look, people are more inclined to believe stuff without verifying it when it comes from a like-minded individual, like such as another fellow ape online, so on and so forth. But the scale of which people are being taken advantage of here is just absurd. The scale of which source documents are being ignored is absurd. And I'm going to go ahead and just read this to you. This is the white paper from the industry this is out of the DTCC, a white paper to the industry, and it's titled "From Physical to Digital: Advancing the Dematerialization of U.S. Securities." So let's go ahead and take a look. So, dear colleagues and stakeholders, resilience is a term often used to describe the ability to respond to adversity, and DTCC has long considered resilience an integral part of our values and guiding principles. We are proud of how the industry has demonstrated extreme resilience and agility throughout the extraordinary events of the past several months, referring to COVID, managing unprecedented market volatility and transaction volumes. Without question, however, supporting physical securities, a very small piece of the industry's business, has been a distraction from an otherwise very resilient response to the COVID-19 pandemic. Today, the industry has reached an inflection point, highlighting the compelling need to move forward to full dematerialization. The cost and risk incurred by processing physical securities are no longer acceptable. So this is them telling you right here, by you not DRSing, it's costing them money. So let's keep reading. DTCC has outlined a roadmap towards dematerialization. We are now embarking on building consensus among the stakeholders on critical next steps and engagement, much in the way the industry worked together cooperatively to successfully implement T+2 settlement in 2017. Without question, there are operational hurdles within this area of the industry, including issues related to business models, record keeping, inventory, resilience, and controls. However, the complete dematerialization of physical securities, fully transitioning away from paper to electronic records, that's what dematerialization is. Let me read that again. Dematerialization is fully transitioning away from paper certificates, the ones you give up when you DRS, to electronic records, the DRS advice statement that you now possess, will contribute to a more cost-effective, efficient, transparent, secure, competitive, and above all, resilient marketplace for all. It doesn't say anything about stopping shorts or reducing the amount of shorts in the market. It says, hey, we have a problem with keeping up with all of these paper certificates everywhere. We need to go ahead and take care of that by destroying them. But how are they going to do that? Let's keep reading. So, executive summary. The COVID-19 pandemic of 2020 has highlighted the need for continuity and resiliency in the securities market, including post-trade life cycle. The intention of this paper is to mobilize the industry to aggressively streamline one aspect of the post-trade life cycle, the servicing and processes of physical securities. Through the dematerialization of physical securities, the industry can significantly reduce touch points and automate processes. There has been a long-standing movement to achieve full dematerialization in the U.S. financial markets. I'm going to read that again. A long-standing movement to achieve full dematerialization in the U.S. financial markets and to finally transition away from physical certificates to electronic records. In fact, those outside of the immediate industry might not realize that while firms today are investing hundreds of millions of dollars into modernizing processing systems, enhancing electronic trading technology to shave milliseconds from trades, and exploring cutting-edge fintech innovations like distributed ledger technology and digital and tokenized securities, physical securities processing still exists. The management and processing of physical securities are industry-wide challenges, yet there is strong precedent for the success of dematerialization. Dozens of countries across Europe, Asia Pacific, Africa, and Latin America have stopped issuing physical certificates altogether. Currently, most U.S. securities, including municipal and corporate bonds, U.S. government and mortgage-backed securities, commercial paper, and mutual funds are offered only in paperless form. Certain asset classes, such as listed and unlisted equities, have largely achieved dematerialization through the FAST Automated Securities Transfer Program, or FAST, and direct registration system. There's your first sign of it. Now, however, even in the current state of dematerialization, it is often still possible to obtain certificates, which continues to result in multiple handling touchpoints between beneficial owners and financial intermediaries and pose risks associated with physical securities processing. With this paper, DTCC and its depository subsidiary, the Depository Trust Company, seek the partnership and participation of all industry stakeholders, including banks, broker-dealers, transfer agents, issuers, regulators, industry associations, and exchanges in the effort to achieve full dematerialization in the U.S. financial markets. We need to form an active working group and collaborate to set aggressive but realistic goals and a timeline. Together, we will forge a plan to achieve the following goals within the next 3 to 4 years. These are their bullet points for this plan. Eliminate new issuances of securities in physical form. Establish a streamlined process for the conversion of existing physical securities to electronic form. Promote DTCC's FAST program by supporting the conversations of non-FAST agents to FAST in order to transition away from high-touch processing. Incentivize participation in DRS. Now hold on a second. What do you see going around all over Reddit, all over YouTube, all over Twitter, all over Weeble comments about DRS? Use it. Everyone DRS. Do it. Go ahead. Now, wouldn't you say they achieved this goal? Because they sure as fuck did incentivize the participation in DRS, didn't they? So you see now how we're helping them? Makes sense, doesn't it? Because I'm reading it from a document, not a opinionated Reddit article. This is literally from the DTCC telling you what's happening right now. The success of this plan will require strong support from industry organizations. Like, I don't know, let's go back and read this. Partnership between banks, stakeholders, broker-dealers, transfer agents, issuers, regulators, industry associations, and exchanges. They're all working together to incentivize participation in DRS. Now, doesn't it make a lot more sense why you see this going around all over the social media space now? It probably should. Now, again, the success of this plan will require strong support from industry organizations. It will also require a full-scale and committed adoption by stakeholders of new business practices, changes in technology platforms, and shifts in the legal landscape. And it will require support from regulators. The benefit of achieving complete dematerialization, reducing, and ultimately eliminating paper will lead to a significantly more efficient and resilient U.S. marketplace. So, dematerialization today. For several years, the processing of physical securities has lagged behind the efficiency and resiliency of servicing dematerialized securities and has posed myriad challenges for the industry and for the investing public. While the crushing mountain of the paperwork crisis in the 1960s and 70s was addressed by the two-pronged approach of immobilization and dematerialization, there continues to be certain risks associated with physical securities, such as delays in issuing or delivering physical certificates, as well as disruption from loss, theft, and natural disasters. Scope, size, and dimension of the challenge. Physical securities have not been a growth area for the securities industry for many years. Over time, the economies of scale for physical securities processing have been completely reversed. The cost incurred in supporting physical certificate processing remain fixed, even though the number of physical transactions is dwindling. Right now, the amount of effort required to support physical securities processing is significantly disproportionate to its actual value. Stakeholders. As with each past crisis or market downturn, re-examining industry practices and processes can lead to opportunities to improve the performance of the industry and businesses. Dematerialization is a complex industry issue that will require collaboration and consensus among all industry stakeholders to forge a realistic plan, set achievable goals, and determine a time frame for the adoption of dematerialization proposals. DTCC banks, broker-dealers, transfer agents, issuers, and industry associations, among others, each have their own roles and responsibilities for the success of the dematerialization plan. Finally, in order to achieve success, it is critical that the industry has the support of regulators. Now, dematerialization goals. Let's get into this shit. In terms of equity securities, all exchange-listed issues are now required to have a FAST agent that is also a DTC DRS limited participant who, in conjunction with DTC, provides access to the direct registration system. In order to be DRS eligible, the issuer must be authorized to issue the security in book entry form under its corporate governing documents. DRS provides for an individual investor to have its shares registered in its name directly on the books of the issuer or transfer agent. The investor's ownership of the shares is reflected in a DRS statement that is provided by the transfer agent to the investor. In addition, an investor through a DTC participant can request that its beneficially owned securities be withdrawn electronically from DTC and be registered in the investor's name directly on the books of the transfer agent, not GameStop, the transfer agent. The investor, through a DTC participant, can also request that its shares be transferred from the books of the transfer agent to the account of its securities intermediary at DTC, at which point the securities will be credited to Seed & Co. on the books of the transfer agent. Currently, a security that is DRS eligible is not required to participate in DRS. If an issuer wishes to participate in the DRS program, it can choose between two options. Number one, DRS participating / DRS statement or certificate form. The security is not fully uncertificated. By default, a holder will receive a DRS statement of its ownership of shares from the transfer agent. However, the holder could also obtain a certificate from the transfer agent upon request. Option number two, DRS participating / DRS statement only form. The security is fully uncertificated. A holder can only receive a DRS statement and cannot obtain a certificate from the transfer agent. Number two is most people's situation with DRS in the current day and age. Now, to cease the creation of new physical certificates, exchanges should continue their efforts to amend their listing requirements to mandate DRS statement only form, or option 2, basically. And this is going to be for all newly listed issues. This will be a critical step forward to full dematerialization of new equity issuances. DTCC is fully supportive of further collaboration with issuers and transfer agents to encourage existing issuing companies to no longer offer certificates. In terms of debt issuances, there are already dematerialization initiatives being implemented or discussed, including ECDs and uncertificated corporate debt. These initiatives, as well as further expansion of uncertificated debt issuances, will also require collaboration and cooperation among industry stakeholders. Now, nothing is faster than FAST. With FAST, transfer agents currently maintain a jumbo balance certificate, one for each issue, registered in the depository nominee's name, Seed & Co. Balances are automatically adjusted each day based on deposit and withdrawal activity at DTCC, and FAST transfer agents electronically confirm balances daily. A transfer agent for a DRS participating security that is listed on an exchange is not required to maintain a jumbo balance certificate for Seed & Co. because they can draw down on it whenever they want. Now, DTC is exploring ways to add more efficiencies to the FAST program that can encourage greater participation by transfer agents and issuers. Now, when we go and we look at automate high-touch processing through FAST, the FAST program minimizes the movement of physical securities between DTC and transfer agents by reducing the number of physical certificates that need to be canceled, re-registered, deposited, or withdrawn. The FAST program eliminates record-keeping redundancies and manual processes, facilitates the industry's dematerialization efforts, and plays a significant role in reducing the costs associated with shipping certificates to and from agents, as well as the costs related to printing and processing certificates. FAST, introduced in 1975 with a few hundred issues and several agents, was critical to helping the industry reduce the number of physical certificates being created and moved between DTCC and the transfer agent community. Transfer agents play a central role in driving dematerialization and helping educate issuers and investors on the benefits of dematerialization. DTCC will work to promote the efficiencies of the FAST process with the goal of converting all non-FAST processing to FAST. This is a critical step in dematerialization of physical certificates and will position the transfer agent to support DRS for all equity issues. Today, there are over 135 FAST agents with over 1.2 million issues valued at over $60 trillion. So, why are they doing this? To reduce existing inventory in the industry's vaults. Because again, the way you're fucking them is by buying and holding your certificated shares through the broker. By giving those back to the DTCC in uncertificated form, you're helping them, clearly based on this document. Now, to date, many millions of share certificates in the United States capital market have been dematerialized. With concerted efforts and the help of the transfer agent community, DTCC believes a realistic target in the next 3 years would be the full dematerialization of 98+% of all physical stock certificates. A big step towards reducing the number of existing physical certificates held by industry participants is to convert non-fast transfer agents to fast agents, as mentioned above. However, full dematerialization of equities will require full participation in DRS, i.e., DRS statement only. So let me just read that again for anyone who's still in doubt and anyone who thinks DRS is going to cause some kind of magical problem for the DTC when they're literally telling you right here, full dematerialization of equities will require full participation in DRS. So literally, think about this, people. Look at what's going on Reddit. Look at what's going on YouTube. Everyone's pushing this shit. Why? Because they held the carrot on a stick, said, here you go. It's going to prevent shorts from getting your shares. Despite GME's short interest only going up since DRS started. Despite GME's price only going down since DRS started. So, again, doesn't take rocket science to put 2 and 2 together. And then they want full participation in DRS statement only form, or option 2 that I read above. The conversion of existing physical inventory to DRS statement only will take collaboration among the issuers and their transfer agents, custodians, broker-dealers, exchanges, and regulators. Big collaborative effort to rope you in. Now, DTC only allows for the withdrawal of DRS participating issues in statement only form. However, certificates for DRS eligible issues that are not statement only may still be obtained at the issuer's transfer agent. DTCC believes this practice is an obstacle to dematerialization and that ultimately the only option for DRS should be your DRS only statement form. To move toward that goal, DTCC believes that now is the time to begin to minimize physical securities transactions of DRS issues that are not statement only. Specifically, DTC believes that holders should be discouraged from requesting physical certificates and should be encouraged to deposit physical certificates for a DRS participating issue with the transfer agent for conversion back to DRS, whereby they can be electronically deposited into DTC in the event of sale. So again, when it's time to sell your shares, guess what? You're not going to be able to, but all of the ones in DRS, they're going to be able to pull from those, and it's going to help their industry risk significantly, if MOAS were to actually happen. That's the plan. Now, DTCC recognizes that issuers may have chosen to make physical securities available for various business reasons. However, these issuers may not be aware of the cost benefits and efficiency that dematerialization offers. It is the responsibility of industry stakeholders, particularly transfer agents and underwriters, to educate these issues and address concerns. Now, this is their inventory vault as of 2012 and 2020. They're trying to reduce this, and to reduce it, they need you to be in DRS. What remains to be physically processed? We know there is a shrinking inventory of Seed & Co. physical certificates in the DTC vault. Today, less than 1% of assets serviced by DTCC, valued at approximately $780 billion, are still in physical form. And I guarantee you, one of those bottom 1% is probably AMC and GME, considering the amount of people that hold them and the big problem that would create if these stocks were to go up and everyone wanted to sell their shares for a big price because they wouldn't have their certificates. They'd be fucked. But not anymore, because we're all giving them what they want by promoting DRS, when we clearly haven't read the fucking white paper describing why they want you to do DRS in the first place. For fuck's sake, people, let's get with it. Now, while there have been progress towards dematerialization as evidenced by the decreasing volume of traditional physical certificates stored and processed in DTC's vault for book entry services, there has not been meaningful transaction or traction in certain other areas. In particular, there has actually been an increase in the deposit of restricted securities into the DTC custody service. By utilizing the custody service, a client can benefit from, among other things, cost savings from the economies of scale offered by DTC and the added efficiency of the limited depository services offered by DTC with respect to securities held in its custody service. Further industry collaboration is needed to address the asset classes held in DTC's custody service. Restricted equities present an optimal starting place to endeavor toward reducing these assets held. Right here it says the above describes the physical processing at DTC, but it should be noted that the physical securities held in vaults of banks and firms across the industry must also be addressed. With the help of all stakeholders and the support of regulators, DTCC is optimistic that together the industry can eliminate much of the remaining physical inventory. Lastly, the next steps. The drive to fully dematerialize U.S. financial markets has lagged the rest of the industry's modernization during this era of unprecedented economic and technological growth. The goal of this dematerialization effort is to eliminate both the issuance and handling of physical securities, which will result in a more cost-effective, efficient, transparent, secure, competitive, and resilient marketplace. Not for you, but for them. Now, number 1, form working groups and collaborate with industry organizations and regulators to set a timeline. With the support and participation of the industry working groups, the first step will be to determine dematerialization priorities based on complexity and impact. Dematerialization is a complex industry issue that will require coordination and consensus among all stakeholders. The formation of working groups will help set the forum for partnering across stakeholders. Stakeholders will help set priorities, build consensus, and set realistic targets for adoption. We must be united in this effort to eliminate all new issuance in physical form and ultimately convert existing inventory to dematerialized form, or DRS. Now, number 2, automate high-touch processes by converting non-fast agents to fast. We must agree on a timeline for converting all non-fast agents to the fast program. DTC suggests a 36-month, 3-year target to eliminate non-fast transfer agent participation that will require changing DTC rules subject to regulatory approvals to require a fast relationship, affecting all existing certificates except non-transferable and bearer issues. Coordinate activities to convert existing physical inventory in DTC's vault with non-fast agents into fast. We recognize this is not an insignificant effort. DTC currently has 188,849 issues, presenting 491,844 certificates to convert to fast, converting existing non-fast certificates in DTC's vault to fast. Number 3, continue to execute on DTCC's underwriting rewrite project. To eliminate the need for physical securities at the time of issuance, these proposals will pursue the modification of DTCC's new issuance eligibility processes and recommend new business practices for the primary issuance of securities. Continue to build out digital certificates for retail CDs, transforming paper into electronic records for this asset class. There's approximately 30,000 retail CD issuances per year that are issued in physical form. The rollout of electronic CD issuances is scheduled for end of 2020. Leverage the new issuance process to include uncertificated distinction for debt issuances. Continue work with the STA Debt Committee to recognize this new form of issuance and the indenture of this issuance, and modify DTC's issuance governing documentation for alignment with this new form of debt issuance. Work with industry stakeholders to determine how best to transition away from the current physical municipal issuance process to uncertificated issuance. And then lastly, number 4 here, require all newly listed equities to conform to DRS statement only and convert all existing equities to DRS statement only. As a central depository, DTCC is in the middle of every depository eligible physical transactions between its clients and transfer agents, and from that position has identified all non-DRS statement only equities as the number 1 priority to address and convert to DRS statement only. DTCC Securities Processing Team has estimated they spend almost 30% of their time processing DRS eligible physical deposits. To stop the creation and issuance of physical certificates for all new equity listings and to convert existing equities, DTCC recommends the following. Number 1, DTC should no longer negotiate certificates except through DRS statement only. Continue to work with exchanges to encourage rule filing and accelerate the process to amend listing rules requiring all new equity listings, including OTC and pink sheet issuers, to conform to DRS statement only. Work with transfer agents and issuers to implement a mandatory conversion of all certificates issued to DRS statement only. DTC processes approximately 80,000 physical deposits on an annual basis. Converting to DRS statement only will reduce and eventually eliminate processing these deposits. Determine a date whereby DTC will no longer accept physical deposit of DRS eligible issues, establishing the transfer agent as the sole recipient of certificates with further deposit to DTC in electronic form. DTC suggests January 2022 as the target, allowing time for firms to adjust to this new requirement and necessary rule amendments subject to regulatory approval. Last but not least, optimize processing of restricted securities to manage remaining inventory. This work stream will require stakeholders to evaluate how the model for the issuance and custody of restricted shares can be made more efficient and perhaps dematerialized. So you know what? This got me thinking. What's their timeline? 2023. When's GameStop gonna go? 2023. When's AMC gonna go? 2023. Now, why the fuck would they want to incentivize you to use DRS so that you can't fucking sell when the stocks run in 2023? You're gonna be stuck. They're gonna have their risk reduced, and then all the dumb fucks who decided to stick to the original plan are going to be the ones that profit. So I guess at this point, if you still want a DRS, thanks for diamond handing by force for us. The rest of us who aren't falling for this bullshit are going to rake in the dough. Let's go, baby. I just read you irrefutable proof that DRS is what they want you to fucking do. So call me a shill, call me a plane, call me a bird. I give zero fucks at this point because you cannot argue this. Have a good one.